Good morning. This is Paul Nunez from Paul's Picks. Today is Saturday, 11/22/25. I've been doing some videos on money moving to the healthcare sector during this S&P downturn since in November. Have a listen to Josh Brown in the Compound and Friends and see how he talks about in his group about this money flow change and his buddy's ideas on it. Give a listen.
So let's talk about the rest of the market because Warren, you're right. It has been the leadership has narrowed, just continues to. Like a couple of weeks ago, we were talking about the rubber band between equal weight divided by cap weight was already stretched, and then it just snapped and like crashed low. Now that was a local top, but it just continues to happen. So you mentioned this earlier in the show, John. Throw these charts on. So half of the constituents in the S&P 500, chart 3, trail the index by 10% or more, which is not quite off the charts, but we're getting there. And then you also mentioned that more S&P constituents trail the index by 20% than are beating it. What do you take away from this?
I think this is what we're talking about. Like if you look at the equal weight at the start of all these bull markets, so like it leads usually. Equal weight is off the bottom. We set a bottom. Equal weight leads. Small caps lead. Low quality, high beta leads. This has been a straight grind lower in the equal weight. It's been a straight grind lower in small caps relative to the S&P 500. I mean, this is a brutal market because in order to beat the market, you can be at your benchmark, but in order to beat the market, you have to allocate an overweight to these tech positions.
Nobody wants to do
You
that.
already feel overweight. Like it's 50%
Yeah.
of the market at this point in time. So yeah, that's what I take away from all that.
You know why nobody wants to do that? Number one, they don't actually think it'll work. They think, my luck, I'm going to get overweight NVIDIA and Apple and Microsoft right at the top. And then you can't answer for it. Like, in other words, if you build a if you build a portfolio with like 60 positions, right? Which is pretty diversified for like a long only, especially for a hedge fund. Like, you're not going to live or die based on any of them. You're definitely not going to beat the market. But you won't have to apologize. If you come into Jan 26 and you're 300-400 basis points ahead of the index on some of the largest stocks in the country, and those stocks have a start the year off badly, then you're apologizing. Like, what you're an index fund on steroids? That's what I'm paying you 2 and 20 for. So like, there's two reasons nobody wants to do it. And the first is they don't think it'll work. And that second reason is even worse. It's like, I can't even explain this if it goes wrong. There's a lot
Yeah,
you could explain a 60 position portfolio that trails the benchmark, because of course it does, right? You can't explain being overweight the top 5 market caps in the.
That's
like,
such a
what were
good
you-
point.
What were you thinking?
Don't you think that's what's sort of prolonging this, Warren? Like it's hard to say that there's so much underinvestment in these names because NVIDIA's a $5 trillion market cap. But Josh's point is so important for market psychology.
Yeah, I mean, well, we have looked at this. So the pattern of this bull market, you hear this, it's just replete. I don't know if I put a chart in there, and I think I did actually. It's chart. If you skip all the way, just to give you something to reference, if you're watching. If you skip, well, I guess I didn't put it in. Sorry. Anyways, but there's been a consistent pattern where the mega cap leads, the rest of the market falls apart, and you get a wobble in the market, just like we had here recently. You get a wobble in the market, and then everyone comes on TV. Everyone expects, well, hey, we're going to get a broadening. We're going to get this broadening. Equal weight's going to take the baton. The cap weight's going to give up, but we do get a bit of a broadening because the bull market continues, but it's never a leadership shift. The leadership has maintained each one of those little cycles. It maintains in these large caps. It maintains in the tech sectors like comm services, tech, Amazon, those stocks. That's the pattern. Is you get a little bit of a broadening, but never the baton actually being taken by the other 400.
Well, they're not big enough. Well, they're really not big enough. Like, there are healthcare companies that are $300-400 billion. There's a couple of energy stocks that are a few $100 billion, but like, they're just not. Last week we had this amazing rotation into energy and healthcare. And a lot of people played it. A lot of people made money because some of these stocks went up huge, like the Amgens, the AbbVies. Saw some nice moves in the refinery stocks, but they're just not big enough to become the new leaders. And they definitely are not going to be telling stories about 20% year-over-year revenue growth as far as the eye can see. They can't do it. There is a physical constraint to how much those companies can grow.
And those were just, I think those are the new era defensive, because like utilities are now part of they've gotten sucked into this AI
Part of
trade.
the
So it's
growth
not a
trade.
defensive anymore. So you have healthcare and you have energy. We've been making the case for a long time. Energy is your best diversifier in the market. Not that you want to be overweight. We're bearish on oil, been bearish on oil all year, but it's doing things that nothing else is doing. So I think that rotation, healthcare had been so beaten up until that move, and you could just see this coordinated like shift in flows over to healthcare, over to energy, and it's kind of this where we're at with like the pods and everything. And
Yeah, they're just not trillion. They're just not $2 trillion companies. Like Eli Lilly is gigantic by healthcare standards, not by stock market standards.
Warren, I want to ask you about one of the reasons why you're one of my favorite.
So there you have it. Healthcare is temporary. It's just so beaten up that that's where the money's going right now. And they refer to it as a small cycle, a wobbling of the economy, and that typically tech sector leads by far the other sectors. So this is something to chew on. I guess what goes through my mind is this small healthcare run will only go so far. And I need to be nimble as usual, pull out of healthcare as soon as those trend lines show. So please share your thoughts, and I will see you on the trading floor. Thanks.